Welcome to Trade Ideas. I'm Jake Merl, sitting down with Steve Strazza, co-founder of the Chart Report. Steve, great to have you back on the show.
Thanks for having me.
So as we've seen, the market has taken a pretty big hit this past week or so, although today it looks like stocks are starting to rebound. We've made a short-term series of lower highs and lower lows, specifically talking about the S&P. So given this market backdrop, are there any specific sectors or industry groups you're looking at right now during this time of volatility?
So a lot of market participants like to duck and cover when we enter periods of volatility like this. The way we like to play it as technicians is just take a step back, zoom out, remember that the structural trend is still higher and very much in place. And then we want to look for pockets of strength when we do get these pullbacks, because they will offer some great opportunities on the long side in the right sectors or industry groups like you're talking about. So one way that I do that is just following my normal process. Typically on the weekends, I'll look through different watch lists. Two that I always look at, I'll typically look at throughout the week also, is all three of the Dow 30 components. And I look at a list of basically a lot of US ETFs that are basically sectors and subsectors and industry groups. Some are thematic ETFs, niche industries. But in doing that this past week, after last week's selling pressure, something stuck out. It was just very obvious. I was looking through my list of Dow stocks, and McDonald's was not only the only stock on the list to make a new high, we had over 50% of Dow components make new monthly lows last week, and in that very rough tape, McDonald's actually made a new all-time high. It was its 7th consecutive weekly closing all-time high, which is pretty impressive. So it's just been stair-stepping higher, and that led me to look a little bit further into the group. So when I was looking at my US ETF list, I looked at the food and beverage ETF. It's PBJ, also showing a lot of strength. Had a bullish engulfing week last week. Prices closed higher again for the 5th consecutive week in that ETF. So I kind of drilled in and looked at the components there, and I realized that there was a lot of strength coming out of the bars and restaurants industry. And I drilled down from there into the Dow Jones industry list, and I looked at the restaurants and bars index, which is DJUSRU. And what you see there is it's actually breaking out, if you pull up the chart, of about a 7-month base to new all-time highs. So when we see something like that, that's a very long-term consolidation. And when it moves or resolves to the upside, it's probably going to have some legs. So then we drilled in further from the restaurants and bars index, and I started to look for some components showing strength. So you don't just have the largest names of that group driving the strength, like Starbucks, Chipotle, McDonald's, Yum Brands, but there's also some smaller companies like Denny's, Wendy's, Darden Restaurants, and then Wingstop, which is the trade idea that I brought today.
So going back to something you just mentioned before, you talked about the bullish engulfing candle. Yep. What exactly does that mean, and why is it so important?
So a bullish engulfing candle is a very positive signal. I was looking at weekly candlestick charts. It's a formation that will appear only on candlestick chart. And what it means is that the real body of the prior candle was engulfed, or the entire body was covered by the body of the following candle. So basically, we opened lower and then closed higher than last week's opening and closing range. So basically, it's a reversal signal that people will look for on a short-term basis. In the case of the ETF PBJ, it's sitting about 3% off all-time highs. When you see that bullish engulfing there, usually means further upside. And I just think it's another positive, another feather in the hat for this trade.
So that in combination with the momentum, with the relative strength and that huge base, you think this is a good play right now?
Absolutely. I think the whole space really, even if you look at PBJ, the ETF, it's got about 80% consumer staples, and a lot of those names have been really performing really well in this environment.
And so your trade idea for today is Wingstop, is that right?
Yes. So Wingstop, ticker Wing. Basically, when I was looking at the restaurant and bars industry list of all the components in that industry, Wing stood out as a very strong performer really since IPOing, late 2015. What it did after IPOing, I brought along a long-term chart, which we could look at first. The weekly chart of Wing, you see a nice base for about the first 2 years, and then it broke out in mid to late 2017. And I drew Fibonacci extensions from the 2015 drawdown And we have hit, I think, 3 of those objectives already. We hit the 161.8% extension, the 261.8% extension, and now we're sitting just below the 423.6% extension. And if you look at the chart, you'll see every time it hits one of those levels, it kind of retests, pauses a little bit, digests those gains, and just keeps moving. We have a nice upward sloping 200-day moving average showing us that the trend is in play. We always want to be in the strongest stocks, in the strongest groups, right? So what I did was I charted Wing relative to the S&P, and you see that it actually just closed at a brand new all-time high yesterday. And then I also charted Wing relative to Dow Jones Restaurants and Bars Index. So we already know that the Restaurants and Bars Index is breaking out relative to the S&P. Now we want to find the strongest names within that index and invest in those names, right? So Wing hit a new all-time high versus the Restaurant and Bars Index late 2018. And it looks like it's just been consolidating nicely since, and it's ready to resolve higher. And then for a more tactical trade, what I did was I drilled down to the daily time frame. I actually, instead of using the Fibonacci extensions from the 2015 base, we retested that 200-day moving average on the pullback in Q3, Q4. We actually kissed it about twice, which you could see on both the daily and the weekly chart. So I drew another Fibonacci extension based on the drawdown late 2018. And if you put the price target at the 261.8% extension, that'll get you to about $102.50, which is our price target.
So I know you're a technical analyst, and this trade is purely based on technical analysis.
Yes.
But that being said, are there any fundamental risks to the trade, or what would concern you if things don't go your way?
In fact, fundamentally, I would say that people could be more comfortable knowing that this company, Wingstop in particular, 90% of its business is really done within the United States. It has about 1,100 branches in the US and just about 100 internationally. So if you're looking for something that's not going to have a lot of headline risk, anything trade related, tariff related, it's this kind of name. At the same time, I want you to take that with a grain of salt, because we're seeing names like McDonald's and Starbucks, which McDonald's at least does the majority of their business overseas, and that's showing incredible strength. So if it helps you to sleep at night knowing that this stock is insulated from trade-related headlines, then you get that with Wingstop.
So what would you say is the biggest risk if it's not trade war related?
There's really, biggest risk would be a drawdown in the broader market that would bring down high beta stocks like Wingstop.
But why hasn't that happened already? Why has Wing, outperformed while the market has been tanking?
Well, we don't know, but that's why we want to be in it, and that's why we want to err on the long side and basically anticipate that it will resolve in the direction of the underlying trend, which is higher. So once we see it right now banging on that $80 level of resistance, we would typically just anticipate that it will resolve in the direction of the underlying trend, and that's why we give it that benefit of the doubt. But in terms of risk management, we have a stop at the previous lows just from earlier in the month or last month, which actually came down and retested almost to the penny the prior all-time highs from 2018, which was at about 74.20. So that's a perfect place to define your risk. And if you do that and follow your risk management protocols correctly, then there's really not much risk to the trade. You have about 7% of downside. And based on our price target, we have 27% of upside. That gives you close to a 4 times reward to risk ratio, which we really like. That's very favorable in this environment.
And over what time horizon do you expect this thesis to play out?
I would give this about 3 to 6 months.
So the rapper Rick Ross is a big franchise owner of Wingstop, right?
I have heard this.
Right. And he's actually, had some lyrics about it in his songs, kind of to promote the company. But unfortunately, he hasn't really had a top song in quite some time. So is this, thesis you have predicated on a Rick Ross comeback?
I hate to break it to you, Jake. My thesis has nothing to do with the rapper Rick Ross, but happy that he owns franchises and hope he buys some more, but not at all. And if he wants to buy it here, he could probably make some good money on this trade as well.
Well, Steve, that was great. Thanks so much for joining us.
Thanks for having me, Jake.
So Steve is bullish on Wingstop. Specifically, he suggests buying ticker symbol WING at a daily close above 80 with a stop loss at 74.20 and a target price at 102.50 over the next 3 to 6 months. That was Steve Strazza of The Chart Report, and for Real Vision, I'm Jake Merl.